A very good morning. Welcome to binary.com. Welcome to this live trading room here, always on Mondays at 8 a.m. GMT and 8 a.m. UK time. Thanks for joining us today, this 1st of December. We, of course, have a lot of things and stuff to discuss because this is the first day of the month and we have a new trading month completed, November. And with that said, we also actually are heading into the last month of 2014. So very exciting, a few weeks to go, and then we will have the completion of this trading year. But before we take a look at what I would be expecting for this week, my name is Chris, by the way, once again, binary.com. Let's first discuss this PowerPoint. One of the things I want to show you is this risk disclaimer. Trading for exchange and global financial markets is considered high risk and it may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for educational and informational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here, and you can always request a copy by contacting binary.com and requesting the copy of this disclaimer. I thank you for your attention. If you're not able to join anytime, any webinar live by any chance, just sign up through blog.binary.com/weekly trading room with your name and email address, and you'll get an email with the recording just a few hours from now. So you'll be able to watch the session again or for the first time at any point throughout the week. So that's always useful. With that said, let's take a look at the euro dollar, pound dollar, dollar yen, odd USD, and the XAU USD. Now, one thing I should note regarding the news events this week, they're quite substantial. We have interest rate decisions on the euro, the pound, the Australian dollar, the Canadian dollar. We have dollar news regarding NFP, non-farm payroll, unemployment claims on Friday, and also ADP on Wednesday. So it's quite sizable, which often enough could lead to quite a fireworks, quite a lot of price action movements at those specific news event releases. So that is something to be cautious of and aware of. Now, the euro dollar 1 hour chart, it basically at this moment looks like it's in a wedge. We have green lines on top, green line on bottom, prices between those supportive resistances, and is making a wedge. From a bigger time frame point of view, 4 hour chart, you can see that this decline is potentially part of a breakout. And I'm very interested in this potential breakout to the downside. First of all, the main reason here is that price is in a downtrend. When looking at the downtrend here, you can see prices making lower lows, lower highs. We have a clear trend line that is showing the potential here of the downtrend. And if we just make that a different color so it's clear which trend line I'm talking about, let's make it orange. You can see the price is nicely below that orange-red line and making lower lows and lower highs. There's no doubt about the trend. Now, obviously, at points, price is not continuing with the downtrend, but it's kind of like consolidating. And it had such a consolidation here too. But price broke out of that already. Price already broke out of this support line. Broke, hooked back, and now seems to continue. So when price can push through the next support line, it's another potential of trading it. The first potential was here. The second one was on the hook back or pullback. The third one would even be here. Or actually the fourth one, because the first one could have been all the way at the top here. So there are a lot of ways to trade trends. Breakouts, pullbacks, bounces, continuations. This is a continuation in a way, because we already had all of those breaks before. If you're in that trade, you're doing well. And we talked about the euro dollar downside last week, in fact, as well. Now, it is true that the downside did take a while before it happened. Look, first we got a lot of upside. We traced pretty steeply, but then eventually we did get the turn. Price started to turn and started to fall slowly but surely, and now is attempting to do a second break after the retracement of last week. Don't forget that last week we were talking about the break of this trend line here. I should draw that a bit more neater, like this. So that break was already happened 2 weeks ago, and last week we talked about the continuation. So that is now probably going to happen, or at least I am keeping an eye on that possibility. How? By taking a look at this 4-hour candle. I want a 4-hour candle that is below this green trend line, and I want a close that is near the low. If those two things happen and the majority of the candle is below the trend line, the three things in fact, no, two things, majority of the trend line and a close near the low, plus a sizable candle, then I would attempt to short on the euro dollar. And the time frame could be anything within, I would expect after that between 6 and 12 candles to 6 and 11, 6 to 10 candles to work out fine. If you're looking for a target regarding price, I think 130, 123, 122 are good targets in terms of price. And if you're looking for a stop loss, anything above here, this top, or the 126 is good. So that's the time factor and spot price exit entry thoughts that I have on the euro dollar. Now, really nothing much to add to the euro dollar, because if you look at all the higher time frames, you just see the downtrend more clearly. And that's really it. There's nothing really more to add. One thing, though, what we could add is the fact that last week was a bit bullish. So it's going to be interesting to see if we can break last week's low. That's something to be aware of. Last week's low is coming in at 123.70. And last but not least, on the monthly chart, we can take a look at that. Last month, how did it end up? Let me take everything off. Let's take a look. Sorry about that. It's a bit slow. Okay. Last month was bearish, right? Bit of a wick at the bottom, but was bearish. So last month's high should not be broken. 126. That could be a good stop loss level because typically, as you can see, all these months we've had lower lows and lower highs. No exception. So I would expect this month to not break last month's high, but break last month's low. Now, from a bigger time frame perspective, as you probably know, I've already told you, is this trend line, this monthly trend line could be a bouncing spot at around 121, 122. So my target is that trend line, and then I would expect some bounce to the upside or consolidation sideways. Alrighty, that's the euro dollar. Let's take a look at the pound dollar. Now, pound dollar is a bit different because the pound dollar has already broken the support level and already has accelerated to the downside. Otherwise, it's the same story. It's in a downtrend. Let's take a look at the weekly chart. Lower lows, lower highs, all these weekly candles. Take a look at the monthly candle. Yeah, let me take away this fib for a second so you can see it. Bearish candle, actually even more bearish than the euro. Why? Because the candle is bigger. Why? Because the close is more near the low. So the bearish imprint is more substantial on the pound dollar looking at the monthly candle than the euro dollar. So downtrend still heavily in play and would expect the same downtrend continuation on the pound dollar. Weekly chart we can see bearishness, and we've had a break. So what I'm looking for basically is very simple. I'm looking for price to make a pullback to the 50 or the 61.8 fib, bump into the broken support, which is now resistance, bump into the trend line here that you can put on the chart like this, which is also resistance, and I would expect price to turn at 157, 157.25 for more downside. What I will wait for though is candlestick price action confirmation at these resistance spots. Why? Because I want to see price indeed turn at the levels that I'm analyzing, at the levels that I'm expecting. If I don't see that confirmation, you never know. Price could just keep on pushing up, and perhaps this is double bottom and just makes a reversal. I don't want to live through that. I don't want to be exposed to that danger. So I rather wait for confirmation at the 50 or the 61.8 Fibonacci retracement fibs. All right. So with that said, the target I think could be 154, 155, but even lower. Potentially price could even go to lower levels. But those are the primary targets for the moment. Once price gets there, and I see the confirmation, I would expect a decent number of candles to go down after that. I would say probably in this case, I would feel more comfortable with more than like 8 to 15 candles. I would expect to be after 8 to 15. I would expect price to be lower than the turning spot. Just my rough estimation at this point in time. So that's the pound dollar for this week. I would expect bearishness continuation. Now, what if price doesn't get into my zone? What if price doesn't get into the 50 to 61.8 fib, but just only goes to the 38.2 or the 23.6 and keeps falling? My backup plan in that case, well, one thing is one could just skip the currency. The second would be, of course, to wait for the break of this bottom and take shorts below this bottom. But it will only be tradable, I think, in my humble opinion, on a lower time frame. Only on an hourly, a 30-minute chart, for instance, maybe even 15-minute chart. Because otherwise, I don't think there's enough reward potential there. There's not enough space for price to make a dash and justify the risk. Don't forget, the targets are pretty close, right? Well, they're substantial, but once you break the bottom, targets are getting closer. 155, 154 are not too far once you break the bottom. So that's why I wouldn't take the trade on the 4-hour chart. I would zoom in and look for good pullbacks on a lower time frame to take the trade to the downside. That's the backup plan. Now, what happens if price doesn't stop at the 50 and 61.8 fib, but continues higher? Then I wouldn't trade it and would wait for price to get to higher fibs, like the 880, 88.6 or the 78.6, and wait for confirmation at those levels, even double top. But if price breaks double top, then I'm not interested anymore in shorts and would skip shorts after that for the moment and wait for new analysis and market environment to set up before taking it up or down. All right, let's move over to the dollar yen. Now, the dollar yen has been a great uptrend, of course, and I talked about the fact that I took a trade last week. Now, that trade went fine and very well, as you know, 24th of November, and you can see that the trade worked out very nicely. Good upside after some sideways move, right? I took a long somewhere in here, and price went up, went down, and then eventually went up. So, as we can see, depending on what time frame, of course, and what the target is and what the exit is, there was a good chance of a profit like I made for myself. The upside here lasted 5, 6, 7, 8 candles, maybe even 10, depending on exactly where the entry was done, even up to 12. Then, of course, the candles 13 to 17 were down, but then after that, we're up again as well. So those were good. That was a good trade. Now, I think still obviously the trend hasn't changed. The trend is still up, and it's still bullish. There's no change in that. In fact, price has moved up in a few weeks, some 1,500 pips, which is an amazing trend. You can see here big acceleration and a nice uptrend channel. Now, price can still continue in that uptrend channel, but there's one problem about current price. I'm not too big fan of it now. First of all, it's halfway the channel. I would like, preferably, for price to get closer to the bottom of the channel again. Second of all, price is at the red line, which is the previous top. So I'm not too enthusiastic about going long right in front of resistance, nor am I so enthusiastic about going short because the trend is so strongly up and the channel is so nice. So I don't want to trade it short at this point, but I do want to trade it long, just not from current price level. So what am I waiting for? I'm waiting for either the top to break and looking for intraday trades to the upside. That is one opportunity, just like the pound dollar. Looking for basically a break below the bottom and trading it on lower time frames. I could do the same here for breaking the top and then waiting for intraday charts setups on lower time frames above the red line. The other opportunity would be, of course, the pullback to the bottom of the channel and looking for longs at the bottom of the uptrend channel. Okay, so that would be the other possibility here on the dollar yen. So looking at these two setups, these are basically the two methods, just like the pound dollar, to tackle the dollar yen upside. Then, of course, I have the odd USD. The odd USD is basically breaking to the downside. All right, we have a very strong break. You can see, for instance, here on the weekly chart, if we put a trend line here on the bottom of the monthly chart here like this at 86.50, we can see that price had a lot of struggle when trying to break through it, right? You can see the price was for weeks going sideways. Let's take a look and zoom in, and we can try to see that in a better situation here. You can see that the break went not so smoothly the last few weeks. You can see that price was going sideways. This bottom here, the first higher magenta line, let me get rid of the second one. You can see 1, 2, 3, 4, 5, 6, 7, 8 weeks going sideways. But last week, let me get rid of this fib so you can see it a bit better. Last week, finally, we had a full candle below the monthly support and a candle close that was very near the low, indicating bears were in control and bears were dominating the downside. So I'm looking for uptrend continuation, downtrend continuation, excuse me, and I'm looking for price to find a good entry for downside. So if I look at the daily chart and then the 4-hour chart, any upside retracement could be a good spot for downside. But specifically, I'm looking at, by putting a fib on this, for price to get back to the 50 or 61.8 fib, preferably. If we look at the daily chart here, you can see, of course, that these levels right in here were support and now have been broken. Those can act as resistance as well. So when we zoom back to the 4-hour chart, you can see anywhere between the 50 fib, I would say, and the 78.6 is a sweet zone, which is good for shorting areas on this odd USD. And I will look, of course, for confirmation for price to turn at those spots before taking those shorts. So that's the zone I'm looking for on the Aussie. Now, if price doesn't get there or misses it, right? For instance, I would be looking for intraday shorts below the bottom. That's one way of doing it. If price pushes through the 50 or 78.6 fib, then I would keep an eye on higher fibs and eventually just revert back to a neutral stance, neutral position on this odd USD. Because if it breaks too much to the upside, if it breaks too high, then it's not as bearish as I thought. If it breaks above these trend lines, if it breaks above the top, 86.15, I would be more cautious and just be on, let's say, neutral ground and wait for more information. The target, 83.60, and then 82.90, 83 are the main targets. And otherwise, I have nothing to add. I could just take a look here quickly with you to see how the weekly candle ended up. That, of course, was bearish. We already looked at that. Sorry, the monthly candle, excuse me. And you can see here, bearish candle as well, yet again, on the Aussie, breaking through support. So the Aussie monthly continuing with the bearishness, the third month in a row, and maybe even 4 or 5, depending on how you count. So that looks bearish on the Aussie, just looking for a good spot to trade. Alrighty, XAU USD had a break of this rising wedge, finally fell to the downside, pretty strong fall in fact at the minus 618 target, and the turning spot indeed at this 1206 as I was thinking. So of course that had to do with the referendum, partly that had a big effect. Now if you look at the weekly chart, you can see that last week was bearish, a big fall. Monthly chart was a doji. But all in all, price is pushing through slowly but surely, yet again through the 1180. So I would be looking for follow through. Now, at this point, by the way, I'm not trading gold as that much. In fact, I'm more trading currencies. But if I would be trading it, let me say it this way, then I would be putting a fib. That's not the right tool. We'd be putting a fib from here to here and looking for price basically to retrace to any of these fibs and look for turnaround signals for more downside. Alrighty, with that said, I thank you for your attention and thank you for joining us in this heads up of the first week of December, which is the last month of the year. Thank you so much. Join us next week, the 8th of December, at blog.binary.com/weekly trading room, and we'll take a look at how December indeed started and how it might finish the rest of the year. Wish you all good trading and see you all very soon. Cheers.